Meyer, founder and CEO of Amazon solutions provider Envision Horizon.
And I'm Todd Piechowski, Director of Performance Marketing at Envision Horizons. We've teamed up to make the Common Mistakes podcast.
Todd and I meet with business owners, leaders, and investors to discuss common mistakes and other business experiences they've learned from. Tune in every other Tuesday for your dose of business advice. Hello, and welcome to another episode of Common Mistakes, where we talk about mistakes we've made, seen, so you don't have to learn the hard way. I'm Laura Meyer.
And I'm Todd Piechowski. Today we have the pleasure of speaking with Chad Rubin. He's the founder and CEO of Profasee, and that's Profasee, Profasee. He's also the co-founder of Skubana, which was acquired, co-founder of Prosper Show, also acquired, and founder of Think Crucial. Chad, thanks for coming on the show.
Thanks for having me.
Absolutely.
Awesome. Well, we're going to go ahead and jump into my favorite question to warm up the conversation. Chad, I'd love if you could share a mistake you've made that today you are so thankful for because it was such a positive learning experience.
Yeah, so I can share so many mistakes, and all of them are teaching moments in my life. I would say that in developing Profasee, I used a lot of previous businesses as like a framework so that I never make those mistakes again or always remind me of those mistakes so I can utilize them in my next business. So I made a list, by the way, of all the mistakes I've made. One of them in particular I thought was interesting for me, and one I can share here would be that we started focus. So Skubana is an operations platform, right? It's order orchestration for multi-channel sellers and inventory management. And one of the challenges with that is that it's hard to prove and demonstrate an ROI. And so when you go out and you do like outbound sales, it's hard to have an ROI calculator or say, hey, if you use this software, we're going to make you this much more money, because we were typically more so like doctors. People would come to us with a pain and we would prescribe them medication and show them how our platform works with their workflow. So using that same framework with Profasee, I've designed something that optimizes for profitability and has a clear, crystal clear vision of how we can help you make more money and how we deliver that to our clients.
I love that point because I think as service providers in any capacity, right, you're always told to focus on solution to a problem. And sometimes some of those solutions, like you said, are more of a medication-like solution versus it's actually, there's that direct impact on either revenue or bottom line. And I think that's a great segue into what you're doing with your new business, which is pricing optimization. Is that, I guess, a correct way to frame it?
So yeah, that's absolutely the right way to frame it. So I'll share with you just broad strokes. So, and this is not necessarily a new idea, right? It's happened, like Uber has surge pricing, Airbnb has smart pricing, even Amazon changes their price about 2.1 million times a day. So the problem is that like Amazon brands don't change price. And if they did change price, they have no idea what they're changing it to because it's filled with a lot of human error and assumptions. So this all started, by the way, of me trying to improve the economics of my ecom business, which is Think Crucial. And we tried everything, right? We tried to manage our spend, our ad spend. We tried to remove expenses that we thought were frivolous, not necessarily frivolous, but like not needed or duplicative. And no one's really adjusting price. And if people are adjusting price, they're just saying, hey, let me just increase price without understanding what the impact to the entire business is. So we started doing this manually, and I started realizing that actually it can be done using data science and using behavioral science to do it far superior than I can do it manually. So that gives you a good intro of like what we're doing. We're essentially dynamically changing price to optimize for profitability for Amazon brands.
And so in your experience, both with your e-commerce business, but also being heavily involved in the Amazon kind of FBA seller community, what are those pricing mistakes you've seen or even made yourself?
So I have 500 SKUs, all private label. We have about 1,000 listings. So just the sheer size and scale of our listings is hard to manage. It's hard to manage the listing. It's hard to manage the content of those listings, the photography, and to keep up with competitors and inventory and everything else. So, I mean, countless mistakes, but certainly just because somebody says just raise your price doesn't mean it's actually the most optimal move or the optimal decision to make. So the question is, how do you maximize profit without sacrificing your BSR, without sacrificing your competitive positioning or your BSR on Amazon. And there's so many factors that go into it. Now, by the way, like Amazon itself, like shoppers leave behind a lot of clues, behaviors, preferences, searches. A lot of the stuff you can get through the APIs, a lot of the stuff you can't get through the APIs, you can get through other methodologies. So we pull into a model all these variables. So there's like temporal elements to a model, like seasonality and holidays. There's the competitive landscape. For example, like if you're competing on keywords with a specific competitor, what's their BSR relative to your BSR? What's their review count, the quality of the reviews, the quantity of the reviews, inventory position? All of this flows into the model, and it allows our system, just like Instagram, for example. There's not someone behind on Instagram saying like, "Oh, Laura liked this, so we're going to show her more of this." There's reinforcement learning that happens on Instagram, where the model is actually reinforcing by your behavior itself and learns from it and actually the optimal thing to show you so that you're essentially releasing more dopamine so you stay attached to your computer or to your phone. In that same way, we're using a model that we've built that reinforces itself over time, that is learning from all the behaviors of your customers, of your competitors, and is optimizing to optimize the price to create the largest amount of profit contribution to the business possible.
I have two questions. I'd like to back up just with one of them first. Can we talk about what the difference is between Profasee and your traditional repricer? I think I understand what the differences are, but I think that's a question a lot of people might ask. That was my first thought.
Yeah, that's a great question. And I think an important one. So in the traditional sense, repricers have been built to help sellers win the buy box. So back in the day, and there's still a lot of reselling that happens on Amazon, although 70% of Amazon is private label right now. So a lot of repricers were built to help you optimize to win the buy box. And the main ingredient of that really is price, right? Price and FBA, and probably a little bit of inventory positioning sprinkled in there. This is a completely different beast. This is essentially not trying to win the buy box, but winning the SERP, the search engine ranking page on Amazon. So if you type in garlic press, on page one, you're going to get 20 different garlic presses with different reviews, and you'll get ads. You'll get ones with no ads. You'll get organic. You'll get best Amazon choice or bestseller badges. You'll have promotions on those items. But how do you know if you're priced at $11.99 for a garlic press on Amazon and you're selling 10,000 units a month? How do you know that maybe if it's, did I say $10.99? If you're at $10.99, how do you know that you don't actually bump that to $11.99 and your BSR doesn't essentially improve, so it goes down and your profit goes up, right? Unless you test it, you optimize for it. And the second question is, well, like when you make that change and you leave it there and you're doing all these other things as a business owner, when you come back and your competition has already responded to that price change or your ad spend dollars are shifted, how do you know what the next proper price is? And we don't have the time to do this in real time. So that's why we use data science and machine learning to do that for us.
Yeah, I definitely think it's a much needed software in the industry for sure. I think now we can go into technicalities, which I think you were getting into, is how do you balance those price adjustments he makes and the impact those prices have on the Amazon flywheel? So is there an interplay with organic rank built into the learning? I'm assuming you're looking at those data points.
Oh yeah, yeah. I mean, I'm not the model's learning from those data points all day long. And I look at Amazon like a stock, right? It's a bunch of commodities and widgets that are being traded, and you have my grandma, right, goes and she buys her stocks, Disney or ExxonMobil or whatever she's buying, and she buys and holds, and she's not sophisticated. But then you have your algo traders, right, prop traders that come in and out of positions, and they do them quickly and they do them with sophistication and precision. And that's exactly what we've built for Amazon sellers. We look at Amazon like almost like a basket of stocks, and we come in and out of positions for pricing to maximize the arbitrage, to maximize for profitability. Hopefully that answers your question, but if not, I can double click into anything you'd like.
No, I think it does. I mean, ultimately, if you're adjusting those prices, you've got to find this sweet spot. And I think you have to look more than just those rules-based, functionality that you have at some of the traditional repricers, which don't take into account all of these factors. And if you try to do this on a macro scale at a company, an aggregator, wherever you are, it's very difficult to do without that data science behind it. So
yeah, two things. One is I would have never built this if there was something out there that actually did what I'm talking about.
Right.
So like you have a lot, and it's actually, I made a LinkedIn post about this recently. We came out of stealth. We emerged out of stealth, let's just say a week and a half ago. And within that 2 weeks, a company that does repricing changed their entire verbiage of their site to say that we are AI maximizing for profit. And to me, I think that's just like inherent in what's happening in SaaS in general, but specifically in the Amazon ecosystem, is that you have software providers that are using the AI hype, and the word becomes meaningless over time because everyone uses it. And it's really just weak logic that's masquerading as AI. It's not true AI. And so if you can just change it, your headline tag essentially ruins it for everybody else because they're not delivering on the promise of what truly AI is.
Yeah, and that AI is often hidden behind a wall where those adjustments are made by the system and you can't alter them. At least that's from my experience. Which makes it more obscure.
And so like what we're doing with our clients that we're working with is like, number one is we hop on a call. We have an onboard process. The onboard is super easy, but you give us your min, your max, and your cost of goods sold all in. So that's including your landed costs. And you'd be surprised how many sellers don't have that data available. And then once that happens, we have a preliminary call where we discuss what we believe we can achieve based on the data that we've ingested into the system. And so while you do have black box AI providers out there, I'm not going to throw anybody under the bus, but there are softwares out there that say that they have AI and it's been built a long time ago. We actually sit down with our brands that we're working with and we show them what's been produced and why we're coming to the conclusions we're coming to. So we're not giving you the model. So it's not black box where we're not disclosing anything to you. It's more gray box where it's like in the middle, showing you, hey, this is what we've been able to come up with. This is what we believe we can achieve. This is the inputs we're consuming. And this is what we can deliver to you in a month's time.
Chad, I'd be curious from your point of view with all of the pricing data that is now at your fingertips, as well as your years of Amazon experience, because this is often a debate internally, even here at Envision Horizons, is coupon discounting versus lightning deal discounting versus just changing the list price and showing that strike through. What in your experience, and I'm sure goals, it's dependent on the goals, but what do you see as having the largest impact in at least boosting the velocity of a product?
But just because you boost the velocity, I guess I would challenge that and say, just because you boost velocity doesn't mean you're boosting profit. And so the sellers that we've been working with, a lot of them are very big. They're $20, $25 million in revenue, maybe sometimes just a little bit under that, but they're definitely not $7 million merchants and brands. And we ingest this data and we will show them that they're actually on many SKUs, their net margin is negative. And just because you're lower doesn't mean the perception of value that's been provided by a higher price isn't justified based on the reviews and the quality of the listing that you've created. So there's nothing concrete that says, okay, this is the needle mover to like boosting velocity. But what we are seeing, at least in the data that we've seen so far, is very rarely are merchants adjusting price. They don't change their price that often. And if they are doing it, they're doing it once a month, if that. And by that point, it's already expired. And two, a lot of merchants and brands just are discounting to a point where it just doesn't make economic sense from a sustainability perspective, and they're making mistakes and they're not aware of.
Got it. But just to clarify, so with your software, it really what you're changing, right, is that listing price. You're not necessarily testing and running coupons or lightning deals. You're keeping that.
Correct. Yeah, we're not testing it, although we are pulling in promotions into the model.
Got it.
But we're not creating promotions for you. Maybe that's an opportunity over time. I mean, we're still super early days. So I'm not here to sell the dream. Like there is so much improvement to our model, and we're already seeing a 10 to 12% lift for our merchants on a monthly basis that are using our software. So, I mean, if you talk to me in 6-8 months time, like it'll bake that much more in the oven and it'll be that much more juicy of a product.
Slow cook, keep it juicy, right?
Oh yeah. I like the Instant Pot, which is like the slow cook and the pressure cook together.
The best combination. One of the best appliances I've ever bought. Side note. I think that's like when we talk about pricing, like going back to consultancy days for myself, like you see that so frequently. What you've mentioned is like 2 years of a set price, $14.99, and no one's ever tested it. You look at that Kiva chart and you're like, why have you not at least tried something to do, move the needle? And really your tool kind of looks to solve that question.
Yeah, I would say the reason why a lot of people don't is that A, they have some fear, and B, it's too many inputs to really manage a SKU and to understand all the things that are moving. It's this moving dynamic marketplace. You can't possibly track how your competitors are reacting to your decisions in real time to keep up with these changes.
Yeah. No, that's a great point. And as it gets more and more complex and we get more data points from Amazon, there's no way a human can do it at all.
Totally.
Also with the tool, just wanted to clarify, is it only Amazon specific, or are you thinking, can we apply this in other platforms and maybe D2C, Shopify? Can you look at what Amazon is doing and how you should be pricing when it comes to your Shopify store or anything of that sort?
Yeah. So the reason why I focused on Amazon was it's obviously the largest marketplace in the United States. Amazon is more known for commodity wear and widgets, and it's more acceptable to see price changes. So at Subana, we had a lot of these powerful brands that have maybe potentially a little bit of ego around price. And they're also, a lot of them are multi-channel, right? So they're selling in Target and Sephora, which I also have found to be super interesting, which we can double click into a little bit further. But essentially, I found that a lot of Amazon private label brands and a lot of these brands that have built massive businesses that are 90% focused on Amazon, haven't changed any price, but are very acceptable. They're very open to changing price. And the consumer is very open to seeing those price changes because it's Amazon. But I do think Shopify is an interesting direction to go forward. The question I throw back into your court, Todd, is like if you're buying Allbirds and you saw that you were buying Allbirds for $120 and then suddenly they go down to $100. Now, I guess you'd have to go back to the site to see if the price changed. But if you did, that might create a negative experience for you.
Yeah, I'd be pretty upset.
Whereas like I just bought amazing Bose, this like little portable Bose speaker for Prime Day.
Yeah.
It's pretty awesome. It's like super small and the sound is incredible. I bought it for $70. And my mother-in-law, she saw it get delivered. It was like came in like 2 hours. Great. It's like, oh, I want one. Prime Day was over. Now it's $115. She's like, oh man, I missed it. I missed out on the price. All right, I'll buy it at $115.
Yeah. Yeah, I think that point taken. At Amazon, you're much more receptive to those price changes.
It doesn't mean that I won't move in that direction, but it's definitely probably not, it's not the direction. It's maybe not the top leading contender of the direction. I do think there's opportunity for me too. So we're working with brands that are like 90% Amazon, 10% Shopify. So Amazon, as you know, has logic around wanting to be the lowest, right? And so we can mirror pricing that we're pushing on Amazon back to Shopify and do that with the platform. And that's like, that's something that's awesome, pun intended.
And how do you see inflation being a part of strategy for whether it's the brands you're working with or a lot of these multi-channel brands? Like that's a big discussion we're having with our clients. Is we always tell them that if they want to increase their prices on Amazon, they have to negotiate that new pricing with their retail partners first, and then we can make those changes on Amazon. But do you see an opportunity for multi-channel brands to test Amazon first with your software and find that optimal price? Or do you see your solution as having price always be fluid versus a stagnant MSRP?
So I think pricing should always be fluid. Now, brands that I've been in discussions with, for example, let's just say a brand is on Amazon, and then they're like, oh, we have some exposure on Target or Sephora. Well, that creates some challenges because you're essentially vendor management. You're selling to Sephora, you're selling to Target. You can't control what they're pricing products at. And now those products become your new floor and really massively affect a company. So I think, the dream for a lot of these multi-channel, these sellers, even aggregators, right? You're coming from Thrasio, Todd. The dream for these aggregators is to go multi-channel. And that actually may not be the most optimal decision for the business. Everybody wants this multi-channel exposure. And then when you get into retail and you realize, you know what, Sephora is still only 4% of our revenue and they're sitting on our inventory, but it's actually affecting our pricing strategy on Amazon, which is 96% of our business, it becomes pretty problematic.
Yeah. And I think one thing that we're seeing with a lot of brands is that they almost need to make that commitment of, do they want to be an Amazon first business? And if that's the case, they do need to be a lot more flexible, not only on their pricing, but also flexible with their product positioning, advertising, etc. And I think that there's a very interesting contrast right now on Amazon, as it does seem like Amazon's trying to support brands that are household names a little bit more than they used to. I'm not saying that they're rolling out the red carpet by any means. But, one of the things that I really loved about Amazon back when I started selling my own products back in 2017 is that, I sell men's undershirts, right? Like I could be a no-name brand and still get on the first page for men's undershirt and be outpacing an Under Armour or a Lululemon or one of these other brands. Do you see the future of Amazon remaining to be that platform for scrappy hustle businesses? Or as advertising gets more expensive, as the algorithm has sophisticated and doesn't reward those giveaways and all of the scrappy hacks, growth hacks that sellers used to do, I guess, where do you see the future of Amazon going in terms of who really has the competitive advantage to succeed?
Yeah, I think being an Amazon brand has gotten, as you know, a lot harder, right? Rising costs across the board. You had to move from being have a point of inspiration and doing product research to actually moving into pivoting from being a seller to an advertiser or being good at both, which is very hard to be in that like liminal space. I would say that I want to say that as a brand, there's the business you're in, the business you're becoming, and a lot of those businesses are shifting dramatically and are experiencing that shift right now and will continue to probably for the next 30 months. I would also say that like as brands are forced to become more sophisticated, they're having to adopt technology at a much more rapid pace to outperform because things on Amazon have a very limited shelf life. So I think that for me, I see a transition. I see a transition of brands having to be like algorithmic brands over time and use algorithms the same way. And by the way, not just for pricing, right, but for everything. And I think that to me is like the future of what's going to happen now. Who's going to win? Like, is it going to be the aggregators? I guess it depends on like what their debt covenants are looking like, and at what point, like, what does their debt structure look like, and what instrument they use for the financing. Like, I think that there are going to be aggregators that do win over time and that do it smarter, but I do think that there's going to be fall off. And like, if you can survive this time right now, which is like super stormy, I think you'll be able to survive into the future.
So you touched on, you just used the word stormy, right? We're all kind of watching what's going to happen with the macroeconomics and its impact on Amazon sales. And we're recording this a week after Prime Day, which for a lot of businesses, not just our business, but a lot of businesses, they actually they exceeded their forecasts and expectations. Like Thrasio put out a press release that they did 100% above last year. We did 110% from last year. I've been seeing a bunch of other stuff on LinkedIn. How do you what do you think is how will this recession that no doubtably is happening or going to happen, how do you foresee that impacting price on Amazon as there's this balance of rising cost and inflation, but also wanting to remain affordable for the consumer?
And before I answer that, so the press release that Thrasio put out, I haven't seen it yet. Was it that they're reporting a rise of 100% increase in revenue?
I believe so. Yeah, it said that their
Yeah.
pre-sales were 100% higher compared to last Prime Day.
Okay,
Yeah.
so my first question would be is like, what's the cohort? Is it the same actual brands, or does it include
I think it was brand to brand because I questioned the same thing.
Okay, so then my next question is, okay, did they lower price so that they can increase velocity and increase revenue, or did they increase prices? And I don't have those answers, right? But those are like questions I would ask myself if I was reading this press release.
I could give a thought surrounding that. I think there's a little bit of both, but I can't say. A little bit of everything that you mentioned there in terms of price would be my guess.
My thought is like, it doesn't really matter about their revenue, right? It matters about their profit. Like they're in business. Their whole thesis was to buy companies at a 2x EBITDA and maximize value by aggregating those together, getting rid of redundant expenses. And so right now, in the position that they're in, they need a force multiplier, right? They need profit maximization, not revenue maximization, to, first of all, support their debt that they've taken on. But two is that to deliver on the promise, because this business is not getting valued on a revenue multiplier, it's getting valued on a EBITDA multiplier. So they need to generate far more EBITDA. And so like to me, that's far more of an interesting story than just saying, hey, our revenue grew 100% year. It's like, doesn't matter. I can lower all my filters on Amazon and sell them for nothing and like lose money, which there's so many people on Amazon already doing that. They don't know the economics of selling on Amazon. And I can issue the same press release,
Yeah, 1,000% growth year over year.
Exactly. And like, and by the way, you have like all these, like, I guess you can call them like asterisk gurus that are revealing their revenue of selling on Amazon. And you just have to ask yourself, like, are they profitably selling? Because I do think that we're in a different era now, right? Like 2010, 2020, both software and Amazon, you're just in the business of like, hey, let's just grow this thing despite anything else, right? Even if profit takes a toll. And now we're entering into a different phase, which is really part of the reason why I started Profasee, was like, how do we effectively manage our business and maximize our profitability across the entire entity.
And by the way, I think that's a theme that's not only happening with Amazon businesses, but with all businesses. And we've even heard from people in the VC world that there's this new culture of finding sustainable growth rather than growth at all costs and let's see what happens.
Yeah, I completely agree. I mean, I just raised money myself and went through the same exact thing.
And how do you set expectations with your investors? Or did you do mostly like true angel investors, like friends, family?
No, I did that at Stubana, and it was super painful because, like, on Hallmark holidays and every other holiday, it's like people get me in the corner and they're like, "Chad, what's going on with Stubana? Tell me, what's the MRR? What's your ARR? What's the update? How's your churn doing? And when are we going to get a return on our investment?" And the Series A investor at Stubana actually is the same investor that invested in Profasee. So we know each other. We have a rapport together. We've seen each other in the worst moments of business life together and personal life. And so I just doubled back down to that investor, and he took the entire round out. But he was definitely, I mean, this is now my fourth company, so maybe it hedges some of the risk, right? But this is risky nonetheless. But I think he liked what we were doing because it's focusing on profit, which is the exact thing that we're talking about: sustainable growth over time and helping Amazon brands. And there's no shortage of them. There's 5 million of them. Everyone's seeking to make more cheddar.
More cheddar. Love it.
Yeah.
Well, awesome. Go ahead, Todd.
All good. Yeah, probably a good last closing question anyway. So after multiple exits, 4 businesses, you said 3, 4?
This is the fourth.
Fourth. Wow. What made you want to come back? What values might have shifted from previous learnings, and what did you do before you'll not do in this new business? We can close with that.
Oh my God, that's a big question.
Sorry.
So first of all, with the sale of Stubana, which to me was like the hardest business I've run, and it came with a lot of highs and a lot of lows. I took a lot of time to reset myself, and I did. And I think I shared this with Laura on our intro call as I was launching Profitability again. So I was like, okay, I can either just jump right back into things, or I can take some time and come out of this period, I call it the Great Reset, as a version of myself. And so I hired a lot of coaches. I hired a chess coach. I have a breathwork coach, DJ coach, a nutritionist. I hired a boxing coach. Like, I really started diving into things that really were going to light me up and like were interesting to me. And I spent a lot of time with my family, my son, like a ton of time, and stared at a tree. So I did all of that. And why did I jump back into it? Well, I definitely am not a stay-at-home father. So being at home, especially during COVID, is hard. And I was like, all right, this is maybe I love spending time with my son, but like I still want to have purpose. So I started working on my ecom company again and fixing a lot of that business because it didn't get a lot of love from me during the Stubana Prosper days, and discovered this problem. And I thought it was a beautiful problem. I thought it was super interesting, and it was a really hard problem. Like, one of my core values with my son is like, Rubens do hard things. And if you ask me, like, if I said to him on the street, like, hey, what do Rubens do? And I'll say hard things. And we challenge ourselves, putting ourselves in uncomfortable situations, because those situations create tremendous growth. So I really wanted to challenge myself, and I wanted a hard problem to solve for. So this is my first time building a software business as a solo founder. It's my first time working on data science, and I love data science and understanding how to build an engineering team from scratch, and pricing, which nobody has been able to achieve in the Amazon world. Like, no one's really been able to do it and do it well. I was like, you know what? That is a chewy, delicious problem, and I want to get my hands all over it. And here we are.
It's a Rubin problem.
Big problem.
You did mention on the website with Profasee that you're looking for beta members with 50 SKUs or more. Is that like strictly more data reason?
So essentially, yes. So like, we have just like if you're covering like a vaccine or a drug, you'd have your control group and you have your experiment group. And so you need to have a control group so we can like monitor performance of the SKUs that we've experimented with relative to the performance of the control group. So we actually can understand what the peer group looks like as a cohort versus each other.
I am thankful that you are coming back to solve this problem, because if anyone can do it, I think you can.
Thank you so much.
Fangirling again, Laura.
Well, awesome. Well, Chad, thank you so much for coming on today, sharing your wisdom, and also the amazing product and vision that you have for solving the Amazon pricing issue. We obviously wish you all the success in the world and hope to have the opportunity to beta test it with you, which I know we're working on. And I want to give listeners the opportunity to connect with you, learn more about you. So where are the best places that they can connect?
Yeah, so chad@profasee.com. You can always email me. I respond. LinkedIn, it's Chad Rubin would be the LinkedIn handle, or just Chad Rubin into LinkedIn. It's Chad Rubin on Instagram. And yeah, feel free to contact me. I'm here to support you and help you.
And I can attest, Chad does respond to random emails because I had cold emailed Chad probably like 4 years ago.
Yeah.
And you responded, hey, I'm in the middle of a raise right now, but get back to me in 2 months.
All right, it's not that bad.
Yeah,
I've had worse.
I at least got a response. Most people in the middle of a fundraise can't even see straight because they're
And
so
we got
busy,
together, didn't we? Didn't we get together too?
Yes, we did. I came to
Yeah.
your offices.
Yeah, I hosted you. Yeah.
Yeah, exactly. You had great hospitality.
Awesome.
All right. Well, have a great day, everyone. Thank you again, Chad, for coming on.
Thank you.
Thank you. Thanks for tuning in to another episode of Common Mistakes. If you're not yet subscribed, be sure to follow us and visit envisionhorizons.com to sign up for our weekly newsletter with all the latest Amazon news and expert advice. For Amazon sellers looking for more support, check out our Amazon brand management platform, myHorizons, and sign up for a free trial. Thanks for your support, and we'll see you on the next episode of Common Mistakes. You did mention on the website with Profasee that you're looking for beta members with 50 SKUs or more. Is that like strictly more data reason?
So essentially, yes. So like we have just like if you're covering like a vaccine or a drug, you'd have your control group and you have your experiment group. And so you need to have a control group so we can like monitor performance of the SKUs that we've experimented with relative to the performance of the control group. So we actually can understand what the peer group looks like as a cohort versus each other.